Real quick before we dive in, this episode includes some adult language. So if you're with the kids, maybe pop your earbuds in. Near the end of the year, and I heard in my ear, you should spend as much money as you can to get your tax write offs and stuff. So I needed to spend more. I spent $20,000, which was absolutely insane. Nor did she ever deliver for the record. But it's that feeling of, I better spend money to get these tax write offs or whatever. So I'm guessing you would agree that was probably not a good move.
Probably, and I'm glad you gave that example though. It's a good lesson learned. We see this happen all the time.
My guest today is a dear friend of mine.
One of them goes, that one over there, she's big money. And it was my guest today.
Her name is Amy Porterfield.
Amy Porterfield, the ever amazing
best-selling author of 2 Weeks Notice, Miss Amy Porterfield.
When I first started my business, I was all in on content and launching and building my email list, all the stuff that I knew I needed to do. But when it came to taxes and business structure, I was literally winging it. Like, I didn't even know what an S-Corp was. And let's not even talk about how long it took me to hire a bookkeeper. I didn't know how to read a P&L I'm talking for years into my business. And there were little things like I didn't know how to give someone a refund. I mean, beyond the taxes and the business structure, I mailed somebody a refund check and a greeting card. So literally, this is early days. I'm like, how do you even do this? So a lot of you listening, you've been in business for a few years, but I bet you could look back and remember like, oh yeah, I was clueless too. And the thing is, even now, if you're a few years into your business, there might be things that you still just don't know around the numbers, around taxes. And I wanted to create an episode where we could just lay it all out because back then I felt really behind. Like, honestly, I was a little embarrassed because I knew I should be treating my business like a real business, but I had no idea where to start. I mean, in the early days, my personal bank account was my business bank account. Like, really early on when I was making my first dollars, it was all combined, which got really messy. So if any of that sounds familiar, you're going to love this conversation. I finally brought on someone that I've been meaning to interview for many years, and he is my friend, Braden Drake. So he's a tax attorney who somehow makes words like deductions and S-Corp and LLC and all of that feel a little bit more doable, actually empowering. So whether you're making six figures and you're still filing as a sole prop, or you just want to stop feeling confused and reactive every time tax season rolls around, this episode is going to change that. We're breaking down the difference between an LLC and an S-Corp, how to save money this year. Like, he's giving a tip that you could do right now to save money before the end of the year with your taxes, and just simple systems that will make you feel more like the CEO that you are. And I promise you at the end, taxes may not be sexy to you, but they're going to be a whole lot more clear. So let's get into it with my guest, Braden Drake. I mean, we go way back. We have known each other forever. It's so fun to watch your business grow, and you've seen my business evolve over time, but you're always the one person that I think about when we get into all the topics today. And all of the questions I'm going to ask you have been asked by my students over and over again. And I thought, let's just have one little place that I could send people back to again and again. So are you ready to just kind of do rapid fire and dive right in?
Oh, I'm ready.
Okay. All right. So here we go. What are the most common tax mistakes that you see online entrepreneurs make over and over again? And what can we do to avoid them from the start?
We have a lot, but the number one is not having a business bank account, or at least having a separate bank account aside from the personal bank account. That's step one for everyone.
Why is that so important?
Because when you go to file your taxes or do your bookkeeping, it separates all the income and expenses. So to give you a real concrete example of this, we have folks hire us pretty regularly to do their bookkeeping. If they don't have a separate bank account and they give us their bank statements, we have no way of knowing what's a business deduction. And now we have to go through the hassle of going like line by line through the bank statements, trying to figure out what was personal, what was business. It's just a huge pain.
Okay, so right out of the gate, we need separate business accounts. You said there's a lot, so let's get into a few more. What's another mistake that you see online business owners do?
Not tracking everything. So you have to have the bank account and then you have to track everything. So let's at least get it in a spreadsheet, deduct things that are tax deductible. And then also overspending, I think, is an issue for a lot of people. So that's less of a tax mistake and more of just a finance mistake. But we got to be savvy with our money.
For sure. And do you believe that everybody who has an online business, let's say they're making 100K or more a year in their online business, do you believe everyone should have a bookkeeper at that point?
Not necessarily. I'll typically advise a bookkeeper once you have an S corporation because they need to have like more savvy financial statements. But up until then, it might not be the most necessary expense.
Got it. And based on your experience of working with a lot of online entrepreneurs, how many of them really understand how to read their P&L?
10 to 20% maybe if I
Okay, so
had to give a ballpark.
low. Yeah.
Yeah.
And I think that's really normal. I remember in my first few years, I had no idea. And I'm not a big numbers girl. So it's something that I definitely shied away from for a long time. But I do think understanding your numbers is so incredibly important so that when you go to pay your taxes, you understand the landscape overall. But that's interesting. Okay. So as a business owner yourself, someone who you also sell courses, you run launches, you have digital products. How have you structured your business financially to support long term growth and peace of mind? I love this question because it's like, you know, all this stuff, you're in it, you're selling courses, memberships, all this stuff. So, how have you structured your business financially to support that long term growth?
Well, personally, I'm a big fan of simplicity, so it might be more simple than some people think, but I teach a concept in my course that I just simply call the Finance Friday routine. I love an alliteration, so if people like Mondays, we can do a Money Monday.
Oh, I love a Money Monday.
Love
Okay.
a Money Monday. I do personal finance Money Mondays and business finance Finance Fridays, but it's really just a checklist. And the number one thing is doing your bookkeeping on a weekly basis so you stay on top of it, check on unpaid invoices, check on contractor payments, check your credit card statement, your bank balance, your tax savings. I do all of that every week. And then I also do a monthly process that I just call the monthly profit report where I look at my P&L, I ask myself some questions. That one's more of like a journaling exercise. And then the more tangible stuff like setting up my S-Corp, we're going to talk a lot about that and just making key financial decisions.
Okay. So, on Friday, what's it called again? Financial Friday?
Yeah, Finance Friday.
How long does that take you? All those things that you just listed?
Well, for me now, my business does. I Transparency is one of my core values. I do profit reports on my own podcast every month, so all of this is public. I'm on track to do about 400K this year, and I sell a lot of low ticket digital products in addition to my courses. So somewhat high volume of transactions, and I still can do it in about a half an hour a week.
Okay.
For a lot of our newer clients, it's like 10 minutes.
Oh, gotcha. Okay, yeah, because they don't have as many transactions. Okay, that makes sense.
Yeah,
And then your Money Monday, so that's where you're kind of doing the same thing, but with your personal expenses.
right.
I
Yeah,
like that a lot. I don't necessarily want to look at all my personal purchases from Amazon this week, especially because it was just Prime. So I might
yeah,
not do that.
I
But
feel that.
yeah, that's a good one. Okay, so what's one deduction or tax strategy that almost no one is using, but that's completely legal? Got to make that clear here. Totally allowed and could make a big impact right now.
Okay, I wanna answer that question, but I wanna sidestep it a little bit, and can we talk about some things that people should not be deducting?
Please.
Okay, because I see this one. Are you on TikTok very much? I know that
Yeah.
you do TikTok, but do you scroll on TikTok very
No,
often?
I hardly do TikTok. I scroll on it way too much.
Okay, same, same. My new ones, Amy, have been, like, watching people buy Birkins every day. I don't know what my problem is, but it's
I've
really
already
fun.
gone through that one, Braden. My new ones are stationary and
Okay,
journaling, but
yeah.
the Birkin one, I was very addicted to for a long time.
Okay, love that. That could maybe be a write-off. We'd have to talk about the
Okay,
Birkin,
good.
but a big one I just saw this last week, so I had to bring it up. Do you know what a G-Wagon is? You like
Yeah.
nice cars, right?
Yes.
Okay. So if everyone can picture it, it's like the very square-shaped Mercedes G-Wagon. There's this tax rule basically that if you buy a vehicle that's over a certain amount of weight, then you can fully write it off in your business.
I've
So I
heard
see
that.
this, yeah, as a tax tip all the time. But horrible business advice for most of us because A, it still needs to be used over 50% for business. Amy, what percentage of business miles do you think most people are putting on their cars when they have a course where they work out of a home office?
I mean, the tiniest. I haven't driven in a week, Braden, so, like,
Yeah.
it's so small.
So small. So a lot of that stuff, like the too good to be true stuff, if it sounds too good to be true, it probably is. So that's one. I saw another one recently where this influencer did like this huge shopping haul to make TikTok videos herself. Not deductible if you're buying a bunch of Prada bags either. So I had to get that off my chest.
Okay, gotcha. I think I saw the same one you saw. So, yes,
Yeah,
I'm with you.
probably. So some things people should be doing, home office is a really big one. So if you have a dedicated home office, you need to make sure that you are reporting that. That can be a good amount of tax savings. Contributing to your IRA. So really simple, practical stuff. You get the tax benefits from your IRA and retirement savings. I'm writing off courses and programs, of course. So anything that you all buy from Amy should be tax deductible for your business. Nice little benefit there. And then contractors are a really big one as well. So anytime you're paying someone to work on or on behalf of your business, really important as well.
Okay, good. But is there one that surprises people that they're like, "Oh, I didn't know I could do that."
Yeah, I will say a really fun one that I think most people don't know. It's not going to save you like a ton of money, but housekeeping. And I bring this up because I'm a little star guest in your
You
slides
are
sometimes,
so
and you
Okay, wait, let's tell people what that means. So, a while ago, Braden has always been a star student of mine. And a while ago, I said, "Okay, Braden, what did you stop doing when you started to make money with your digital course?" He's like, "Oh, easy. I hired a cleaning crew for my house. Like, I have housekeepers now or house cleaners." And I used that in a webinar for years because I loved it because a bunch of my students shared and yours was so good. So, you can wait. I don't write that off.
Oh yeah, yeah. You can write part of that off. So yeah, I just came from, like, a four-bedroom house where I was having my housekeeper come every week. Now I'm in a 500 square foot apartment. Now she comes once a month, but it's all included as part of your home office deduction. So when you get your home office deduction, it's really any kinda house maintenance. So the rent and then any utilities that go along with it, and the rationale for that is if I was gonna go to a WeWork or any other commercial office, my rent would be paying for all of those things. So you only get a percentage of it, but still pretty cool.
Okay, good. I'm absolutely going to do that. And here at this house in Nashville, different than my Carlsbad house, which I know you've been to, is that I have like three big spaces upstairs. I call it the headquarters. So I think I could get a pretty good write off. So I did not know that one. I will be using it. And what's the one? I can't do this now because my son is older, but how people are paying their kids or to work in their business. What is that?
Yeah, so I mean, essentially, you can hire your kids just like you would hire anyone else in your business, and then you get to pay your kids, which is great because they make money instead of just giving them allowance. You make them work. And then it's a business write off for you, which is great because anytime you have a business write off, you're going to save income and self employment taxes.
Great.
But then the way the nuances of the rules work is like if they're under a certain age threshold, you can contribute it to their IRA and then it's tax deductible for them as well. So then it goes completely untaxed. And of course, the rules to that are nuanced, but it's good stuff.
Gotcha. Okay. So let's zoom out just for a minute. A lot of business owners get stuck on this one question very early on. Can you please explain the difference between an LLC and an S-Corp and why this decision really matters? And I hope, Braden, at the end of this, someone who's like, I have been so stuck on this, I've made a decision today on which one to go with.
Great. Well, I have to preface this with Amy. I'm probably going to make you do a little bit of math. So I hope you're
No,
ready.
I'm terrible at math, Braden. So just be careful on this one.
Okay, okay. Well, I'll do it out loud too, so everyone can follow along. The first thing is a lot of people you have to understand that an LLC is really just a legal designation. It's not a tax thing. So when we start our businesses by default, like let's say you're out there and you decide that you want to create your course and you're like, I'm going to create a course, I'm going to start selling it. Now you own a business. You're a business owner. You have an intent to make a profit. So if you don't go to any effort to form a business entity, you'd be deemed a sole proprietor. However, if you want to protect all of your personal assets from liability, you would form an LLC, and the LLC is taxed the same as the sole prop. So you think everyone's with me so far?
Yes.
Okay, great. Now, once you have your LLC, you can either just not do anything, in which case it's taxed the same as the sole prop, or you can fill out a form and mail it to the IRS to take advantage of certain tax codes to be taxed a little bit differently under subchapter S of our tax code. That's when we would say that you have an S-Corp. So you can actually form an LLC and be taxed as an S-Corp, or you can form a corporation and be taxed as an S-Corp. But technically, you would be an LLC taxed as an S-Corp in most circumstances.
I think that's not I think, that is exactly what mine is.
Yeah, yeah, most likely. Some people will do the corporation and the S-Corp, but LLCs are easier to form, so that's what most of us will do. So that's kind of our setup. And the purpose of the S-Corp is it allows all of us to pay ourselves the same way as these like big tech founders do. So Amy, you probably know that most of these guys, they take like kind of a modest salary and then they make most of their money off like their stocks and their distributions and all that kind of stuff, right? So that's what we do in the S corp. So here's where our math example comes in. Okay, okay.
I'm so
We're gonna do it together, Amy.
Okay.
Okay, so you have $150,000 in revenue. So revenue for everyone listening, that's all the money that comes into your business. And then $50,000 in deductible business expenses. So what's our profit, Amy?
100.
100. Great. So we have $100,000. So pretty simple. If we do not have an S corp, so in other words, if we're a sole proprietor or an LLC, the way our tax system works is that we pay all of our taxes based on that 100K in profit. So we have our tax brackets that we're probably all familiar with, but then we also have our self-employment taxes, which is Medicare and Social Security. And that's a 15.3% tax.
Okay.
So we pay income tax, we pay 15.3% self-employment tax on all of that profit in our business.
Gotcha.
Okay, so if we do an S corp, things are a little bit different because Amy, you have an S corp, right?
Hmm.
And you don't have to tell us how much your salary is. I won't get that nosy, but you're on payroll, right? Because you're in
Yes.
your S corp. Yeah. So you pay yourself a salary. I have an S corp. I pay myself a salary. So the way this works, we'll use the same numbers. So 150K in revenue, 50,000 expenses. We have 100,000 left over. Now we're going to say in this example, we're going to put ourselves on a $60,000 salary,
Okay.
which means after that 60,000, we have 40,000 left over. Make
Yes.
sense?
I'm with you.
Okay, great. So on that salary, we still pay both of those taxes. We pay the income tax, we pay the Medicare and Social Security or self-employment tax. But on all the money left over, because it's considered like a profit distribution, we don't have to pay Medicare and Social Security taxes.
Gotcha.
So in other words, we save that 15.3% on our $40,000 in profit, which could be about $6,000 in tax savings.
Great.
Yeah. Easy peasy, right?
It is. So with that, are you suggesting that most of my listeners, you're not giving tax advice, you're not their lawyer or their what is it? I was going to say tax guy.
Yeah. Not their accountant, CPA, or attorney.
Thank you. I was like, why can't I think of all those words? However, would you advise that most people should look into the LLC but through S corp?
I wouldn't say most. I would say once you start making consistent revenue, you need to look into it. The kind of caveat here is that you have to pay yourself a salary. Because if you don't pay yourself a salary, I see this all the time. This is the biggest mistake that we see is people don't put themselves on payroll. And then if you're not on payroll, you pay $0 in a Medicare and Social Security. Like, do we think the IRS likes that very much?
Probably not.
No. So your salary has to be reasonable. We do some research as to what that means, but typically we're not going to see people do S corps and it actually makes sense until their profit is like $60,000 to $80,000 or six figures for sure.
Okay, that's so helpful. Okay, great. So for those listening, that's a benchmark that could be really valuable. Okay, good. All right. Well, I'm so glad you explained that part because it comes up a lot for sure. And I think you did a really great job explaining it in a way that I could understand. So thank you so much because this stuff doesn't come naturally to me.
Of course.
Okay, so how about this? Can you share a real world example of someone who made the S Corp switch and then saw major tax savings?
Yeah, we have a few. So just in the past year, I've had one client who primarily runs courses and memberships and things like that. I've worked with someone who owned a wedding venue and just recently like a publisher of digital downloads. So they've all kind of ranged in salary, but our course creator client, they were profiting over like $300,000. So that's after expenses. And we put them on a salary of around $120,000. And then after we got everything else set up, we got the retirement set up, all that good stuff. They were probably saving about 10 grand a year in taxes.
That's a lot.
Yeah. Yeah,
Okay.
a lot. I mean, that's like a few big vacations or, like extra savings towards your down payment on your house or whatever.
Absolutely. Now, that story reminds me, I want to talk to you about paying yourself. That might be very new to some people. So, walk us through how to pay yourself properly as an S Corp owner. Like, are you signing up for a payroll service? Because a lot of my, not students, well, students are listening too, but just my listeners in general, they don't have employees yet. And so they're not having a bunch of people on payroll. So, how are they paying themselves? And also, what do most people get wrong with this? And what are some of the long-term consequences if not set up correctly?
Yeah, well, I wanna back it up even a step before that, before people have S corps, because super common question. When you don't have an S corp, you have no obligation technically, legally, to pay yourself regularly, but it's still a really good habit. This is why the book Profit First by Mike Michalowicz, I think you probably know him, you probably interviewed him.
So funny you say that because today I literally traveled to go do an interview with him on a show he has called Becoming Self-Made. So yes, I know him well.
That's amazing. He's fantastic. I highly recommend that book to everyone, but that's really kind of the core ethos is pay yourself first. So I just got off a client call before we started recording with a client who's making about $30,000 in revenue, 20,000 profit, and I encouraged herself just to start transferring $500 a month from her business to herself to build the habit of paying herself. And then we basically set up benchmarks for her to increase that amount by a few $100s every 6 months or so until she gets to the point where she's paying herself enough to equal what a salary would be in an S Corp. And then she'll already have the habits in order to make the jump to do that. Once she then forms the S Corp, she's technically, it's like you're hiring yourself as your first employee. It feels very weird and silly at first, but you're going to use a payroll company. It's pretty much required that you do that. It's very difficult to do it without a payroll company, but it's like $50 a month. And then you're going to pay yourself through payroll. Most people will do once a month. I like to do mine twice a month. I do it on the 1st and 15th, and it's pretty simple. I pay myself $3,500 through my payroll twice a month, so $7,000 a month in salary, which is where a lot of our clients are as well.
Okay. Okay, so that's helpful. And do you have a favorite software to use for payroll?
I use Gusto.
I
I
do
like
too.
it. Yeah, it's pretty approachable. There are several other competitors out there as well, but Gusto's nice.
Okay, so at the beginning, I started to ask you about common mistakes that you've seen your clients make and just people building online businesses. But I thought it might be kind of fun if you shared some of your biggest tax mistakes that you've made in your own business. And then what did it teach you so you could help other entrepreneurs? But I thought maybe I'd go first really quick. So, one of the stupidest things I did, and at the time I just didn't know better, is that many, many years ago, I hired this woman who was going to build out a bunch of surveys in the infrastructure inside my email service provider to send out these surveys at different times throughout the year, whatever. Now, these days, you don't need something like that, and AI can absolutely take care of it all. But back in the day, it seemed complicated. But here's the mistake I made. It was near the end of the year, and I heard in my ear, you should spend as much money as you can to get your tax write-offs and stuff. So I needed to spend more. I spent $20,000, which was absolutely insane, nor did she ever deliver for the record. But it's that feeling of, I better spend money to get these tax write-offs or whatever. So I'm guessing you would agree that was probably not a good move.
Probably, and I'm glad you gave that example though. It's a good lesson learned. We see this happen all the time. It's also why that's one of my pet peeves is when I see people market their services in order for people to get a tax deduction before the end of the year.
Yeah, I've seen
Because
that. Yes.
yeah, what will happen is like let's say you have $10,000 in your savings account in your business, which is great. But if you've not been paying your quarterly taxes and now you spend it all to get the tax deduction, it's like, okay, great, you spent the 10,000. That's probably only actually going to save you about $2,000 in taxes. But now you get your tax bill 3 months later and you don't have any savings to pay your tax bill.
Exactly.
Yeah.
Yes.
Yeah. So we don't really want that to happen. Also, a fun little note for everyone. This was how many years were you in business at that point in time?
I probably was in business 3 years at that point.
So is it safe to say you were still on like a pretty sharp upward trajectory
Yes.
revenue-wise?
Yes.
Yeah. So in that case, what we'll often see is your tax bracket's increasing every year because your business is making more and more money. So really, it would make better sense to get that deduction in January because you're paying a higher percentage of your income in taxes the next year because you're going to be in a higher tax bracket.
Oh, interesting. I never thought about it that way.
Yeah.
Okay.
Yeah.
That's
Fun to
good.
consider. Okay. Are you ready for my
I'm
mistake?
ready. I can't wait.
Yeah, mine was actually forming my S-Corp about 2 years too early.
Oh, okay. So what was the downside of that?
Yeah, so the downside was I had, like, a pretty good year, and I was expecting to grow a certain amount the next year, so I went ahead and formed it, and long story short, I just wasn't bringing in enough revenue consistently to pay my own salary, and then there wasn't enough money left over to actually have profit to save that self-employment tax on. So it probably didn't lose me a whole lot of money, but it didn't really net me that much anyway. Luckily, what I always tell my clients is knowledge is power. And when you know enough about taxes, you can kind of dig yourself out of little holes when you get into them, which is why I'm so big on education and my programs. So it wasn't that much of an issue for me. But if I hadn't already known that, it could have been, it could have been a little bit of a bigger issue when I was making all sorts of mistakes with my payroll.
Okay, I hear you on that. Now, I think I should know this answer because I think you probably addressed it, but I thought if I have this question, maybe some of my listeners will. So, and I might look like an idiot by asking this. So I'm just going to do it anyway. So if you formed your S Corp 2 years too early, if you don't have an S Corp, what do you have?
You would be either just a sole prop or a single member LLC. So you would just be paying your taxes based on all your business profit.
So do you have to set something up or
Mm-mm.
no, that's just what it is until you set something up like an S Corp.
Yeah, do you know, so I have this little anecdote in my book, and it's either I'll tell this joke whenever I do stage talks, and it'll either get raucous laughter or a room full of crickets, depending on who my audience is. Have you seen that meme or GIF of Mariah Carey when she was asked about J-Lo back in like 2004? Do you know what I'm talking about?
I do, and I feel like she said something like, "Who's that?" or "I don't
Yeah,
know
she
her."
said she said, "Oh, I don't know her."
Yes, yes.
And
It's
she's
like,
kind of famously, like, a little bit shady sometimes, but I always tell people the IRS is actually the same with regard to LLCs, right? So they don't recognize LLCs, they don't exist, they don't know about them. So until you have an S corp, you're just taxed as a sole proprietor in the eyes of the IRS. So that's when like the jump happens.
okay, good to know. I'm glad I asked then because I bet I wasn't the only one who had it. Okay.
For sure.
So here's my final question before we wrap up, and you're going to tell people kind of a little bit about what you do and your services, just in case someone is in desperate need. So, as we head into the year end, what's one action step someone could take this week to reduce their tax liability for next year, even if they're not switching to an S Corp yet?
Okay, so I'm glad you gave your example because what we're not going to do is spend money just for the sake of spending money.
Amen. Don't do it.
Um, don't do it, but there's 2 things we can do. So the first one is just get your bookkeeping caught up if you haven't already done it, because inevitably it's one of those things where like the more you think about it, the more you're going to remember about that like random thing you spent money on earlier. So let's get that done. And then the second one, and this is something very proactive you can do, is if you haven't already opened a retirement account, because we have this fun little rule that you can actually make retirement contributions up until tax day to get the tax
Oh,
benefits.
okay.
So yeah, so you can make a contribution in like March to get the tax benefit in this tax year. It doesn't have to be by the end of the year, but the account has to be open by the end of the year.
Oh,
So, yeah,
okay.
so what we'll often do is we'll tell people save all your money for taxes, and then when you go talk to your tax preparer, they might tell you you need to pay $7,000 and you're like, "Oh great, I've saved 10,000." You can put that extra 3,000 into that retirement account that you've already opened.
Okay, that's good. The tip of open it now before the end of the year. That's great. I knew you'd come with the goods. I knew you'd just like lay it out for us in the simplest form because you are all about simplicity, which I do love. And so you just make it easy to understand. So tell people a little bit about where they could find you and just information about getting to you online.
Sure. So, you can find all the information at notavglaw.com. My business name is Not Your Average Law Firm, so Not Average Law for short, notavglaw.com. You can learn about all of our offers on there. I am actually technically a tax attorney and a business lawyer, not a CPA. And so what that means is you'll find a lot of small business legal and tax solutions. And then I'm active on Instagram, real big on Threads. That's probably my favorite current platform as well.
Really? I don't
Yeah.
know a lot of people that are real big on threads. Why do you like it so
Well,
much?
I wouldn't say that I'm, like, real popular on Threads, but
No, but just you like to use it a lot.
I like to use it because, as you can imagine, the stuff that I do is not inherently visual, so I don't like or I do like that I don't have to, like, go to Canva and, like, create a graphic before I need to share my thoughts and ideas on there.
That's actually really smart. I love
Yeah.
that. I do have actually, now that I think about it, a lot of friends who get a lot of information from threads. So
Yeah, I've booked a lot of clients off of Threads. I've booked clients off TikTok, it's fun.
so where did they find you on threads?
Not AVG Law. And then, I also wanna shout out my podcast and my book, or should we give our swear warning, Amy?
Yes, there's a swear warning here, but I told him it's the name of the book so he could say it.
Well, and you wrote the little blurb for the back of the book, so
I
people gotta go
did.
check it out. Unfuck Your Biz, that's the name of my podcast and my book, asterisk for the U. I got the trademark for that. A step-by-step framework to get all of your legal and tax shit legit. We walk everyone through that. And then, of course, Amy, I went through a Digital Course Academy, what now, 5, 6 years ago, to
Yes.
create that program.
So cool. I love to hear that. And I love that we've been friends all this many years. So, Braden, thank you so very much. That was very valuable. And I can't wait to just tell people every time I get tax questions, oh, go to this episode, go to this episode. It's going to live on far beyond just in November. So, thank you so very much for being here.
Thanks for having me.